Today we've got some critical information to share with you. Things that are making significant difference in how you manage your wealth. So let's dive in and cover the opportunities and the challenges that lie ahead. So let's start with section 1, economic and stock market risks. Let's take a closer look at the economy and the stock market risks that are currently shaping our financial landscape. Now, let's start with some of the key factors that are out there and how we can actually use them to make informed decisions on where to invest. Let's first start with the Federal Reserve and the influence that they have. Now, in November, we witnessed the largest easing of the US financial conditions of any single month in the past 4 decades. Now, this is due to the Federal Reserve policy changes, and it really has some substantial implications for how we're going to invest in the strategies, not only in the short term, but also more the medium term as well. And what this is showing is that there are recessionary related signals. And these are signals that are really starting to increase. And we're starting to see a pull forward of recession risk. Now, this is a crucial time then to reassess some of the risk exposures that you have and possibly be prepared for a market turndown. Now, here's what we're seeing. The first off is the manufacturing activity is still no better. And the Purchasing Managers Index remains unchanged at 46.7. So this marks 13 consecutive months of contraction in the manufacturing sector. Now, like I said before, anything below 50 is contraction, and what we're starting to see is that this is a persistent challenge for manufacturing. But then we go one step farther and we take a look at new orders, and they are now at 48.3. This is 15 consecutive months of contraction. So yes, there's optimism out there, but what we're seeing is that the underlying aspects here is not optimistic. It's very pessimistic when it comes to how manufacturing and how the economy is doing. Well, let's take a look at other aspects too, like employment in manufacturing. And that's at 45.8, so below contraction. And now this is 5 months that we are contracting. It's at a 5-month low here, and we're really starting to see the ripple effects around the country and in different sectors here. Well, so you see manufacturing, you see the employment, you see the orders that are coming in. What about export orders? Those have fallen off sharply as well. We're down to 46 for that, and this is the 6th consecutive month of contraction and the lowest reading since June of 2020. So what you're starting to see is that the global economic challenges are still there, and we're really starting to see that the exports are not there the way they used to be in months and over the last year. So that is a huge issue. And then when we take a look at the industries in general, only 3 of 20 actually reported growth. So now we're starting to see that the economic recovery and all this optimism that's out there is not necessarily the way that mainstream is working. So this really paints a different picture. And there's a lot more complexity to the economy than what the stock market is actually pricing in right now. So that is the reason why we're saying that there's a lot more recession risks today than what there even was just 3 or 4 months ago. That leads us to section 2, portfolio changes. Now, in light of the economic and market risks that I was just talking about, it's really imperative to adapt our investment strategy so that we can protect but also enhance your portfolio's performance. So there are a couple changes that we have been making over the last couple weeks that are really in line with what we're starting to see. And the first one is that we're increasing our investments in gold. Now, times like this where we're seeing a lot of uncertainty and market volatility, gold often remains as a safe haven. And when we increase our allocation to gold, it really provides a hedge against inflation and currency fluctuations that other investments don't. So while this is something that, yes, they really have their own risk associated with them as well, it historically has been resilient in turbulent times like what we're starting to see. So beyond gold, we're also increasing our investments in gold miners as well. And the miners here are really providing the different assets that are growing with respect to the stocks of the miners that are mining gold. And when gold prices go up, the miners typically start to increase as well. And sometimes it can actually magnify the growth of the gold. So that's where we're looking at really starting to put a little bit more investments into some of those gold miners, and especially other precious metals that are starting to shine as well. So those can be some great alternatives. Now, yes, we have had uranium in the portfolios, and this has actually been a great place to be, especially with the global push for clean energy. And the uranium is something that goes into nuclear and the nuclear power. And with growing concern of climate change, nuclear power is a transition power that can really be sustainable. And the energy that comes out of it is cleaner than, say, what would come from natural gas or even coal. So uranium is presenting some great opportunities at this point. Now, yes, there are some other portfolio changes that we were looking to do, but we're going to be just very strategic about placing these in the accounts just because of the fact that the risks are getting to be a little greater now than what they were, like I said, just even 1 or 2 months ago. But precious metals, uranium, and a number of other places are ones that we see can shine potentially in the months and quarters to come. That brings us to section 3, wealth management in advanced planning. Now, as we navigate through the landscape of changing tax laws and economic uncertainties, advanced planning has become more crucial for wealth management. So we have a couple of strategies that we want to explore and ways that we can be proactive in tax planning. So with that, we really want to take a look at the sunsetting of the tax laws that are coming up. And we want to focus on the 2017 Tax Cut and Jobs Act provisions that are really set to expire at the end of 2025. Now, this is something that has not really been highlighted yet, but it's been something that could potentially impact you and many other Americans. And what is happening here is that could lead to higher tax rates. It could reduce your deductions, and it could require more strategic planning. So that's where we want to discuss now, because your individual tax rates may go up after the Tax Cut and Jobs Act expires. So this could potentially place you and many others into a higher tax bracket. And then again, when we talk about that, the standard deduction actually could be cut in half. And if adjusted for inflation, it still will impact you and many others. So that's something to consider here. Then we're taking a look at this, and then other elements like the estate tax exemption cuts, and that could go by half. We're really starting to see that there could be some significant things that are starting to affect not only your tax rates today on your income, but also the potential to gift and to transfer money to others in the future. So that's something that we need to be considering. But then we also take a look at, say, if you have a business, the elimination of the 20% pass-through deduction. And the deduction for all the different businesses could be potentially removed as well. So there's a lot to do here with respect to planning. And when we take a look at charity, the cap on your adjusted gross income for charity will decrease from 60% to 50%. So there's another element that we need to be worried about. So you're starting to see how all of these are starting to be affected. Now, I'm telling you this because we can be working on some strategies. And with these changes that are potential to come, one of the elements that we've been talking about a lot recently are Roth conversions. And we can do some significant amount of conversions in your retirement accounts now, so that when it comes time that we need to use this money in the future, if the marginal tax rates go up and increase, you may be able to use this money tax-free. That is where we're looking to put more and more money in the tax-free buckets that won't have to worry so much about the marginal tax rates that are out there. Now, the other thing that we can be doing is, if you own your own business, we can be looking at your structure, and there may be some other opportunities to change the structure of your business and take advantage of some of the different tax laws there. So there's some things that we can be doing with that. But what you're seeing is advanced planning element here, especially around taxes, is not just something that we can be worried about today for today's environment, but we want to be anticipating the future changes to come. And what we want to do is take a look at all the different elements, and especially coming up on year end, to make sure that you're taken care of with respect to this year. But then we also put in place a robust and flexible plan for your taxes in the future. That is the power of the advanced planning that we're working through. Section 4, our second opinion service. We've talked about a lot today. In this ever-changing financial landscape, having a second pair of eyes on your wealth plan is invaluable. But you already know that. And that's why we're offering our second opinion service to those you care about. Here's how it works. What we will do is sit down with, whether they're your friends, family members, colleagues, and we'll go through an initial discovery meeting. And we're going to identify if any gaps exist in their plan. Now, one of three things can come out from this investment plan and the gap finder meeting. First one could be that they're in a great spot and that they are completely taken care of. Well, they have you to thank for that because you gave them the opportunity to have a second opinion on their wealth plan. The second element that could come out from this is maybe there's a couple small little adjustments, but either way, they can go back, do it on their own, and know that they are in a better spot because of where you brought them with respect to the second opinion. Now, the third element could be that they may have a couple different things that they need to work on, and this may be the correct way to have them work on the different elements of the advanced plan and their investments. That's what we would present to them, and the solutions to go along with that and ways they can improve their overall wealth plan potentially in the future. Now, that is the element that we offer for you. That's the element that we offer for the friends, family, and coworkers of the ones that you care about. And what we're really doing here is providing them clarity to them and a confidence in their financial journey. So, if you have someone that would like to go through the second opinion, don't hesitate to reach out. We are here to help. Keep an eye out for our next update. We will continue to explore the latest finances and investments to help make sure that you stay informed in your decisions to come. Take care.